Welcome to the Real Estate Investing Failures to Fortunes podcast, the show where we fearlessly dive into the untold stories of real estate investors' greatest setbacks and how they turned those failures into resounding successes. I'm your host, Kate Berry, and we're talking with real estate investors across the country to learn exactly how and why they failed and how they took that failure and turned it into a powerful lesson for their business. So come along with me, Kate Berry, on this transformative journey from failure to fortune. I invite you to join our supportive community where together we can inspire, educate, and motivate each other to achieve all of our real estate investing goals. Welcome to the Real Estate Investing Failures to Fortunes podcast. I'm your host, Kate Berry. On this show, we dive deep into the journeys of real estate investors and agents who have experienced failures, but are willing to share the lessons learned that help them turn those failures into fortunes. We are thrilled to be here today with our guest, Brandon Campbell. Brandon is a top producing loan originator at Lima One Capital. Brandon joined Lima One in 2016 as an entry-level inside sales rep and moved quickly up the leaderboard. Over the years, he has consistently been one of the top 5 originators at his company. He prides himself on not only his loan volume, but also his high success rate in getting his clients across the finish line. Brandon lives in Greer, South Carolina with his wife, Brooke, and 2 children, Rowan and Piper. Brandon, thank you so much for coming on our show.
Yeah, thanks for having me.
So I love to start off our interview with how you got started in real estate. When was it? What got you into it? And what got you hooked onto real estate?
Yeah, my story is not glamorous by no means. So the long and short of it is my girlfriend, now wife, I had just proposed to her in, I think it was May of 2016, and I had $70 in my pocket and no job, lined up, graduating college. And my buddy of mine, he was on the accounting team here at Lima One. He's like, hey, there's this little mortgage company that's starting to blow up. We need some people that got a head between the 2 shoulders. And also there was like a $1,000 referral fee. So he was really trying to recruit me.
Nice.
So yeah. So I applied, and surprisingly, I got the job with no financial background, no mortgage experience. I didn't know what a mortgage was. And so I got thrusted into the mortgage industry, all because, quite frankly, I needed the money, and nobody else was hiring me.
Hey, that's a good motivator,
Yeah.
needing money.
Yeah, sure. Yeah, absolutely. So,
Big reason why most people start getting into real estate, isn't it?
Yeah, all right. So that was June 1st, 2016 when I started, and then I just celebrated my 8th anniversary here at Lima One.
Congratulations.
So, yeah, thanks. It's been a great journey. And the long and short of it is, I started off again as an entry-level guy. They had like this thing, like a draft section, like an NFL draft sort of thing. So they had all the new hires on the board, and they were trying to figure out which departments they were going to stick us in. Then there was this new department called inside sales, and they said, hey, Brandon, you got a face for radio and a phone voice. Let's just stick you on the phones and just answer your phones. So I did that for several years. I grew that team to 25. And then now I'm a top producing originator. I do probably about 100 million a year and loan originations between 300 or 400 different mortgages for folks all over the country. I help people build wealth, rebuild neighborhoods, and get into better school districts. And, it's a very fulfilling job. And I've been very fortunate, very thankful. Over the years, I've had people stick with me, and Lima One's been up and coming too. We're about to lend our 10 billionth dollar, which is just insane to think about. I was a knuckle dragging college kid living off of ramen 2 weeks prior. And then, now I had a big boy job.
I feel like most people may feel a huge amount of terror being told, hey, we're putting you on the phones and we're getting you to cold call. I'm assuming it was cold calling, or, especially if you're coming in not knowing what a mortgage is. Now you're going to be on the phone with people trying to sell them something. What was that like?
Oh, I fell flat on my face. 100%.
No.
Yeah. I mean, I get on the phone and it was ums and ahs. And the thing is, it's me, a 23, 22, 24-year-old kid trying to tell a 50-year-old man that's been doing this for 30 years, these are my terms and this is what I need. And so I felt like I got laughed off the phone the first few times. I remember my first phone call. I was so nervous and I was uptight. And then the guy says the guy, he was trying to call Capital One. And then he found Lima One.
Oh my gosh. So really starting off on a great note.
Great. Yeah. The only time I learn is from mistakes. And I've made thousands of cold calls over the years, and I still bomb them, but thankfully I made some good ones. And people buy money
Yep.
from me.
Yeah, yes. I think that I love talking about that part of the journey. I mean, you started 23 years old, brand new out of college, 70 bucks in your pocket. You're getting on the phone, you're trying to sell mortgages in 2016 market as
Yeah.
well, which is not the easiest market to start in, I would assume. What was it like in that market?
Yeah, and another thing worth mentioning too, so like this whole institutionally backed private money thing that
Mm.
I'm part of is fairly new.
Hmm.
So
Hmm.
Wall Street really didn't take notice of old Lima One until probably 2014, 2015. And
Mm.
then now there's really heavy influence from Wall Street into these business purpose lenders. So back
Yep.
in the day, it was, hey, we're trying to find people to buy notes from us, trying to find additional investors. Thankfully, we have a great investor now. We were bought out in 21, spoiler alert, but things are going great. They buy 100% of our notes, and we have a lot of money to lend.
Nice.
Previously, years prior, it's like, hey, we got to call every Tom, Dick, and Harry to see if they want to buy some business purpose loans from a little mortgage shop in South Carolina, of all
Yeah.
places, right?
Right. Oh
So,
my gosh.
um, and then back then, our rates were not like, the thing is, generally speaking, especially if we're talking like a 30-year mortgage, generally
Yeah.
speaking, these business purpose loans sit maybe 1 point higher,
Mhm.
50 basis points to 1 point higher than your typical residential mortgage, in my
Mhm.
experience. At
Mhm.
the time, we were like 2, 3 points. People were calling us in prime was like 5 or 6. Someone could fact check me, I'm sure, going from memory. And then we were like 7, 8, and 9, and some deals in the tens. But that's the thing, we fit a niche in the market. The thing is, people just couldn't go to their banks.
Yeah.
And we were a solution to those people to help continue to cultivate their wealth and
Yep.
get rental properties. So,
Yes. Amazing. So bring us a little bit along the 8-year journey. Was there a point where you felt, okay, now I'm really rocking and rolling? And when did that happen? How did that happen?
yeah. So, a couple times where I felt like I was the stuff is I remember I was the first senior inside sales consultant. Hey, I was the first guy to get a promo, baby. Look at there.
Yes.
And then
Not junior,
not
senior.
not junior, baby, senior. And then my boss, he came to me, probably about a year later, and he's like, "Hey, there's like 25 of you. There's so many of these guys. So I need your help. Would you be my deputy director of our inside sales department?" I said, "Hey, are there pistols included?" No
Yeah.
pistols included.
Get a badge.
Yeah, and a badge. Felt like Barney Fife.
Yeah.
So, but I was ye old deputy director for, probably about a couple of years. And then that's the thing. I mean, it snowballed into like, hey, I want to sales, you make more money. You can either go the management route or the sales route. And I chose the sales route because you can, the thing is I can show my worth by the points on the leaderboard. And then also my paycheck reflects how hard I work. And
Yeah.
so I 100% opted for that. Now I just lead a small team. It's
Mhm.
me and my processor, Marguerite, and we're taking over the world one deal at a time.
Nice.
Yeah.
And I'm assuming you got married in that time too, and
Yeah.
you've got 2 kids now. It
Yeah.
sounds like you were living the life, right? I mean,
Yeah.
of
How about
course, we
that?
know the theme of this podcast is from failures to fortunes. So take us along the journey. What happened that you would define maybe as a failure or a hard part in your life?
Yeah. In the middle of me moving up and doing a bunch of loans in 21, May of 21, my dad took his life.
Mm.
And it was a terrible time. And I had, of course, I stepped away from work to be with family. And what that really, here's the thing, even today, my wife accuses me of this. I'm a workaholic. I mean, I got the two phones. I got the red iPhone, the bat phone. I try to turn that off at night.
Yeah.
I constantly work, and this industry never stops. People need pre-qual
Yep.
letters at 2 a.m. on a Tuesday.
Yep.
And what that time taught me is the importance of family and the
Mhm.
importance of just slowing down.
Yeah.
Now, that guy can wait 20 minutes so I can sit here and talk with my wife and my kids. And then also, my dad instilled a lot of values in me. He worked 2 jobs growing up. I had great Christmases and all that good stuff. So maybe I get it from him. But he was a great influence over me. I miss him
Oh my
terribly.
gosh. Yeah.
I
Firstly, I want to say I'm so sorry for your loss, and that's pretty
appreciate that.
recent. And I think I've thought to myself many times, I think I'm very similar breed, right? And a lot of us in real estate are. We
Yeah.
work 24/7. The business doesn't stop. You've got to answer that phone or else the phone call is going to somebody else. So you feel the pressure
Yeah.
constantly to stay on top of it. And you never want to lose that momentum. And I think to myself, what would I do if a major life event were to happen to me at this time and everything stops, the world stops. But the truth is though, the world doesn't stop, right? Your world stops. The rest of the world keeps going. And so how did you, or I should say, what was that like for you to transition and how did you get through it?
Yeah, I would still like to say I'm getting through it. I don't think you ever really get over something, you just get used to it.
Yeah,
So now during that time, I pulled the e-brake on everything. I just could not function. I could not think about coupons and interest rates and points. I couldn't deal.
yeah,
So thankfully, my family at Lima One, they helped me. They managed my inbox. They answered my phone calls for me. And so they allowed me to have the several weeks that I needed just to get back to equilibrium so I
yeah,
can get back to it. I had a great team that monitored everything. And then in a case of irony, as I guess as fate would see it, the good Lord above gave me my biggest month ever without
wow.
me ever being there. So I funded like $20 million that month and I just wasn't there at the office.
Oh
And
my
then,
gosh.
and then legitimately 4 weeks later, I got promoted to the position I am now. So it's like, it was a big twist of fate. Didn't see it
Mm,
coming whatsoever.
wow.
I know it's crazy.
To me, hearing this from the outside, though, it wasn't like a miracle, though. It sounded like you had been building resilience around yourself and within your team and your systems and your relationships with the people that you work with, but also your family. That once you put it down, I think maybe for me, it's saying, wow, the momentum didn't stop because of what you had built
Yeah.
to catch you when you fell.
Yeah, and that's one thing I would say, I just happen to be in the relationship business and I just do mortgages. I'm in the
Mhm.
people business, just do mortgages. That's just part of it. My clients have been with me since the very beginning. So all these guys I was cold calling back in the day are still buying from me.
Yeah.
He probably will never listen to this, but Mr. Joe Romano in New Jersey, hey buddy, he was my first cold call. And he picked up the phone and I worked on him 6 months. We closed in January, or no, December of 16.
Hmm.
And he submitted a file with me 3 weeks ago. And he's still with me.
Amazing.
He sent me 2 boxes of cigars when my babies were born. That
Oh,
that guy loves him some Monte Cristo cigars, as do I.
nice. Wow.
Um,
Yeah,
and
and
so
that's time, that's
mhm,
effort, that's bringing value, that's consistency and follow up on all the things that you were doing right. It's not that those things suddenly disappear
nope.
when you go through a major life event. Those things are still there. You created and built that.
Yeah. And I had another customer. He knew that I was just frazzled, like my brain was
Mm,
just not functioning. He told me, he's like, hey, this is just a refinance. Take your time. Just let me know when you have a minute to talk and then we can get this in. And he gave me an extra week. And everybody else was beating down my door, man, to get. And at the time, this was 2020 when rates were
oh my
free.
gosh.
So and
Yes.
yeah, that ended up being my biggest year, by the way, because we pumped trillions of dollars to the economy.
Yeah.
That's
Oh my
another part of it.
gosh.
So
Yeah, let's talk about that a little
sure.
bit. 2021, because we focus a lot in our podcast on 2008
Yeah.
and investors in the 2020 to 2022 era, but I have not talked to a loan originator who went through 21 with the refinances as well. So
Oh my goodness.
bring us into some context about what that market was like.
Okay. So again, interest rates were free. And so like primary mortgages were twos to threes. Okay. And like I said, we're 100 basis points a little bit higher, right? So I was
Yeah.
doing rates in the threes and fours, right? People, it was bonkers, the amount of calls I would get on a day about like, hey, Brandon, we did a loan at 8% 3 years ago. I want to refinance like yesterday. We
Yeah.
got to get this in. Now,
Right. Because no one knew
uh,
how long it was going to last.
nope.
Everyone, knew that this is short and sweet, and you better get in because it may not happen again in our lifetime.
Yeah. Now, here's the downside of that. Now, okay, it was buku, it was bonkers, but here's the thing. Appraisals were impossible to get back in time. They were incredibly expensive. We had
Yes.
customers paying 11, 12, $1,300 for a standard plain Jane 1004 appraisal. It
Yep.
was a great year for a loan officer as well as an appraiser. And then title companies, of course, were backlogged for, weeks at
Yes.
a time.
Yep.
So it was a shotgun blast to see how many you could throw on for the month.
Yes.
Um, yeah. And then let me think, that year, it wasn't our biggest year. Our biggest year, surprisingly, we keep growing. So that year we did like I think 1.8 billion, and then last year we did 2.2 billion.
Wow.
It despite rates going up, people keep buying houses. But back we did like $300 million of just these little refinance loans in December of 21. It was a lot of fun, very stressful, especially coming off, burying my dad, dealing with all that, and then coming back to work. And then I'll never forget, I walked in my office and my boss said, "All right, sit down." He said, "Everything's handled. You're having your biggest month ever. Thank God you're back."
Yeah.
So that's all he said. We need you.
That sounds like a great boss,
Yeah.
I mean, did you know when you started in Lima that it was going to be that great is that maybe why you stayed? Is because of the people that were there? What kept you at Lima for 8 years instead of trying to say, oh, maybe I can go somewhere else or try out something different? What kept
Yeah.
you?
Yeah, that's a good question. It's the people. We have an entrepreneurial spirit here at Lima
Mhm.
One. And just a little bit back about our founders, they were infantry Marines. They served in Ramadi, Iraq together. That's where the name Lima One comes from, is their call sign in the Marines.
Wow.
So great heritage, but the thing is, U.S. military, I'm not former military, so I may be butchering this, but it's my understanding that you are not a Marine. We make you a Marine. And they took that mentality when making loan officers and salespeople, because we've all heard about the terrible loan officers and all the bad habits pre-08, all the mortgage fraud and
Mhm.
crazy like that. Their take was like, hey, we want to find a kid that is young, dumb, and hungry, and we want to teach him how to be a killer out there and teach him how to sell mortgages and teach him everything there is to know about the mortgage industry, this little sector, and then make him successful.
Nice.
And I was a kid in that pipeline, and it worked out. Now, over the years, I mean, I still get every Tom, Dick, and Harry sending me LinkedIn offers like, you can make so much
Yeah,
money
of
over here.
course.
Yeah, but I love a good cold email, by the way. Game recognized game.
Yeah, right. And I love a good cold call actually. And I get
Yeah,
someone that gets me on the phone and they actually catch my attention and hook me in. I'm like, all right, yeah, like
yeah,
you deserve 2 minutes of my time because you got
sure.
that cold call going. So right, give it to me.
Yeah, I had some solar guys come to my house yesterday, and it was the same thing. I was letting them sell. I'm not buying solar. I'm not, but I was letting them sell me on it, and I was like, "Daggum, you almost gonna make me buy solar."
Yeah.
But anyway, yeah, the reason why I'm still here is because, well, I mean, it's a great job. The thing is, Lima One's product suite is unbeatable. There's a
Yes.
lot of people that do one or two things, one trick ponies, but we're really good at the short term fix and flip, new construction, financing, and then we have the long term
Nice.
DSCR, vacation rental stuff. It's easy, plug them in, and then refinance out.
Yes. Yeah,
And
I love that. So I'd love to hear about what's going on with you today? You as a loan originator in this company, in your market, what do you see? What are the trends? What's working? What are people doing? What can we look forward to?
well, hopefully lower rates. Hopefully,
Yes.
I watch CNBC like a hawk, so I think we might get a little rate reduction this year, which would be awesome.
Hmm.
But the thing is, people, well, the majority of deals that I'm doing nowadays, I'm still doing fix and flips. I'm still doing new construction. People are still buying houses, surprisingly.
Yeah.
And then what is very new within the past like 6 weeks, I've had this conversation with customers like, okay, I can give you a 2-year loan, interest only, no prepayment penalty. So whenever Jerome Powell decides to lower the rates, you can
Yep.
refinance with no
Yep.
penalty. And that
Wow.
served a lot of people well over the past 18, 19, 20 months or something like that,
Yeah.
maybe a little bit longer.
Brilliant.
So like, hey, just bridge until a better day and then refinance out. And then a lot more people are just like, well, it sounds like this is here to stay. So my rental pipeline has been up and to the right, like crazy here recently. Like, hey, I got these two houses. I know I'm breaking even on the mortgage payment, but I got to get them off this bridge debt, or like,
Yeah.
well, these rates aren't going anywhere. I mean, we'll figure it out.
Yep.
So a lot more people are doing rental loans. Surprisingly, we had a company meeting this past Wednesday, and that was specifically highlighted. Like, where are you finding rental loans? Like, these came out of the woodwork from nowhere.
Yeah.
Well, people got to get out.
Yes, yes. I'm a commercial broker, so I'm really
Mhm.
working with the buying and selling aspect. And we're coming into, at least in our market, that's a little difficult is they bought rental properties 2020, 2021,
Yep.
real great interest rate, but they were syndications or partnerships, and people want to cash out and move on to the next one. Really, the only option is selling. And
Well,
we're having it, the market took it's tough, especially what all those guys did with those portfolios is value add, right? They value
yeah,
added up as much as they could and brought the rents up as far as they could. So would look great for a refi. But now on the sale side, my buyers are like, but where's the value add? Because they're trying to do the same thing.
sure. Yeah.
And I'm pushing them at a 10%, 12% cap, but it's still a hard sell.
Yeah. Yeah, absolutely. And then the other side of this as well, especially for the single family rental, is appreciation has out sprinted rental income. Markets like Raleigh, North Carolina, the $200,000 house that could rent for 2250 a
Mhm.
month is now 450 and it could rent for $2,500. So
Right,
your cap rates on those are super compressed and your
right.
leverage is not too high for maybe a new buyer. So the guy rode the appreciation wave all the way up if he bought pre-COVID. And then now if he's
Yeah,
looking to sell, the new guy's got to come down with 40% or something absurd just to
right.
break even on the mortgage payment. And so we're seeing a bunch of stuff like stagnate. A lot of people aren't just listing for that reason. I'm
Yes.
talking with a customer right now in Raleigh. That's why it comes top to mind. Purchase price is 300. Rental
Mhm.
income, $2,000. You're not getting the same cash flow you used to.
Right.
So
Yes.
a lot of people are opting for bridge just to see what happens. And also another thing worth mentioning too, the South is turning into like Boulder, Colorado, is turning into
Mhm.
the San Franciscos, and then also like I don't know, I think the Pacific Northwest, Portland.
Yeah.
You got
Mhm.
like these $900,000 townhomes that can rent for $4,000 a month. Just one goes up and the other one's not
Yeah.
keeping up with it.
Yeah.
So I'm curious to see what's going to happen. I said this on another podcast, and I wish something would break. And then the guy said, "Well, you realize that you guys have a bunch of loans on your books, and that would hurt." And I was like, "Well, personal preference, not not
Yeah.
necessarily." Well, something like if mortgage applications went to zero, they'd be like, "All right, we got to do something," and then it would quickly bounce back.
Yes.
I don't know. Maybe I'm just dreaming.
I think what we will see is there's a lot of changes happening, a lot of compression happening,
Yep.
markets really changing, buyer profiles changing, the way we do business changing, AI, technology, Bitcoin. There's so many
Yeah.
new things. So I really see a lot of creative problem solving, and those who can think entrepreneurially, creatively, really do complex problem solving on a financial level, that's going to be what is going to make things possible, right? Because we are
Sure.
really in this affordability crisis
Oh my
in
gosh. Yes.
markets, right? These
Absolutely.
major gaps between firstly, the rental rate, because there's the cap on the rental rate is really dependent on the wages in that
Hmm.
area, which is dependent on the jobs, which is
Yep.
dependent on the industries and inflation and cost of products, all these other factors that are really, really heavy right now in a macroeconomic sense.
Yeah, and it's crazy for me that we live in a time and a place where the guy making 100 grand a year, he may have a car payment, student loans, and he can't afford a house.
Yep,
He's renting. That should be a home buyer. In
exactly.
2018 and 2019, he could have had his pick of the litter, but nowadays that guy can't afford a house. And
Yeah,
yeah, we got to do something. That's for
we got
sure.
to do something. We got to get creative. I think we got to collaborate and partnership and pool resources and really think differently and work with people that are able to be a little more flexible. And, like you said, in your world, you have to maybe charge 50 or 100 basis points higher for the general interest rate. But how are you easier to work with than a traditional bank?
Yeah, the easiest answer to that question is no tax returns, no W-2s, no pay stubs, no blood of your firstborn. Instead, I look for bank statements and the deal's got to make sense and a credit check. So I don't mean to
Perfect.
oversimplify things, but at the same time, we do asset-based lending. So
Mm,
meaning that we look at the asset itself over your personal situation. Now, obviously, if you had 10 bankruptcies last year and you have no money and your credit score's lower than my batting average, then
yeah.
you won't get a loan. So,
That's right.
yeah.
Yeah, right.
Yeah, so all the common sense stuff. But at the same time, if you're buying a property that reasonably cash flows, then you should be able to get a loan. Um,
Yeah.
Now, here's a pro tip. Now, this took me years to figure out. And I learned that a lot of landlords already did this. And so I'm not reinventing the wheel by no means. But generally speaking, when properties hit the 1% rule, so like 1% of your property's value, so if it's a purchase price,
Hmm.
1% of your property's value is the rental income, then or monthly rental income, then generally it qualifies for a higher loan to value. So the $200,000 property renting for $2,000 a month, 400,000 for
Yeah.
$4,000 a month, generally speaking, it works. But what
Yeah.
I'm seeing nowadays is, hey, I'm builders will build a house, the ARV would be 375. Hey,
Mhm.
it can only rent for 2250. I mean, it's a rate and term refi. You're not pulling cash out. Or
Mhm.
people are just straight up buying it and it just does, and you got to put a lot of money down. That's June 2024. That's what that's like. It's uncomfortable. People are getting tying up money in the walls of these houses, but hopefully inflation's coming back down. We should see some interest rate pressure alleviate, and then people are starting to able to do what they normally did, which is pull cash out, put less money down, that sort of thing.
Yes, yes. I think that's really, we need cash to be a little more accessible to get
Hmm.
some of these deals done because we are seeing a lot of, or at least I'm seeing a lot of deals that look great, but we still need cash. We still need things to get them done. And a lot of folks have them tied up in assets that they either can't or really, really don't want to get out of. If they're
Yeah.
anything that's below 5%, even below 6% interest, I mean, how can you give that up? If you have 1.75 interest rate,
Yeah. I'm
what to give that up is like you really have to give them something.
Yeah, absolutely. But the value proposition is, hey, we're going to double your interest rate. I know that sucks, but you're able to buy more houses.
Yes.
And so that's the value prop. And people are still doing that. I mean, we'll still do billions of loans this year. People are still buying real estate.
Yeah, well, because
However,
that's the fun part, isn't it?
yeah,
The
it
buying.
is. The buying part. The selling part's stressful. The buying
Yes.
part's the fun part.
The buying part is fun. I think most real estate investors, and we've got in that habit,
Mhm.
buy, sell, fix, flip, refinance, boom, 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 burr, and so now we're kind of in this a little bit of a log jam and people are getting antsy again. I can feel it. People are like, I really want to start getting stuff going again. And it really is about like, okay, so how do I get financing for the deals that I have? And if any of our listeners, so this will be in our show notes, Brandon, but for anyone that wants to get in touch with you or learn more, how can they best reach out to you?
Yeah. So email is easy. I'm Brandon at Lima1.com, Brandon at Limaone.com. I'm the only Brandon at Lima One. So
Okay,
it's
nice.
really easy to find. So,
And the deputy director, is that still your
well,
title or
now,
even more?
no, now it's the senior sales manager. Look at there.
Amazing.
Oh man,
Okay.
so crazy. And it's so funny. I don't manage anybody. It's just me. So
You're managing the sales, right? The clients and the transactions and
yeah, there's a lot of those, man. Let me tell you.
that's amazing. Well, thank you, Brandon, so much for coming on today and sharing your journey. And it's really great to hear about your success. And, for me, the greatest lesson learned from our talk today is how important it is to build the relationships around you, the systems around you, stay true to what you do, and stay true to your word, follow up, follow through. Because when you've got a time of need, there'll be dozens of people there ready to pick you back up again.
Yeah, ain't that the truth? Yeah, thanks so
Yeah.
much for having me.
You're welcome. I hope to have you on again soon.
Yeah, thanks so much.
Nice. Well, and thank you to our listeners. This is the Failures to Fortunes podcast, and I'm your host, Kate Berry, and we'll see you next time. Thank you for joining us on another episode of Real Estate Investing Failures to Fortunes podcast. If you enjoyed today's stories and insights, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us. Remember, your journey in real estate is a marathon, not a sprint. Embrace the failures, learn from them, and turn them into your stepping stones to success. I'm Kate Berry, and until next time, keep hustling, stay inspired, and keep turning those failures into fortunes. Happy investing.